Well, it's time to connect with Sandip Sabharwal now, who joins in on the show. Hi, Sandeep. No smiles. It's Friday, end of the week. What weekend plans? Are you going to be glued to your TV screen with cricket?
On Sunday for sure,
Yes.
but not at this.
No, Sandeep is never in favor of watching cricket matches because he's an investor in PVR. And investor in PVR, they always lose out when cricket matches happen, right, Sandeep?
No, no. See, you or what you do should not be a factor. Should not be affected by the position you hold. So I don't think that's very valid.
But you've got PVR Inox, which will show the screening of some of the matches as well of the World Cup. So maybe Sandeep can head over there.
The 699 scheme is brilliant. Just think about it. 699 rupees.
Yeah.
You can watch 10 movies.
Yeah.
You can go anytime between Monday and Thursday. I think it's a great scheme. I mean, just while the ticket price is attractive, there's no discount on popcorn and Pepsi, and that's where the high fat margins are. So I think it's a very, very innovative scheme where they're ready to let go of some ticketing revenue, but they may actually be making the footfalls very attractive. Is that the logic, Sandeep?
Yeah, so I think that's obviously the logic. And secondly, on the weekdays, their average occupancy, even in very good movie weeks, tends to be more near 15 to 20% at most, like more near 15-16%. So in any case, the seats are there. Now, if some seats get filled by this kind of promotion, and like you rightly said, the F&B revenues remain the same. Because if you see this quarter results also, ticketing revenues were around 1,300 crores. F&B revenues are around 650 crores. So they are nearly half of ticketing revenues, which is very significant and a high margin business. So I think they are trying to drive all ends of the revenue stream. Even the advertisement revenues, which were lagging behind, have picked up. And ad revenues go directly to the bottom line. And ad revenues are a factor of how you did in the previous quarter. So advertisers see what was the viewership in the previous quarter and then decide the next quarter allocation. So I think that revenue will also keep on improving.
You like Voltas, and I know they will turn around, but I don't know when. I think it's now getting slightly painful to understand that why they are still struggling. The margins weren't great, Sandeep, and at a time when the engineering business is doing well for other companies, Voltas is just not getting their mojo back.
Actually, results are not bad. It's just that the reported numbers look bad because the revenues were much above most analyst expectations. And unfortunately, some of the projects they did years back in the Middle East, they still have to have some write-offs for that. So they wrote off 85 crores because of that. And if operating profits 85 crores were added, the results are actually much above most analyst expectations. Now the key is for us to find out from the management, like, is this the end of the write-off cycle, or there's something more beyond this, because it keeps on recurring periodically. But overall, I think on the consumer engineering side, they are doing well. Electromagnetic, mechanical, given the fact that their order book now is around 8,700 crores vis-a-vis 5,500 crores same quarter last year. And a majority of the projects are now domestic. So I think that write-off, uncertainty, etc., will not be there. So I think such companies we have to buy in bad times, then they end up giving you 30-40% kind of returns. So I think if it gets sold off because of what they have reported, I would still be a buyer.
I'm harping a little too much on the media space, but it's just interesting because there's the latest report that's come out on DB Corp as well, talking about how their digital app is pretty strong. There's limited competition as well, and there's a recovery in print ad revenue that is fairly evident. Just going by the kind of performance as well, Sandeep, just wondering whether or not you have any take on a DB Corp?
Yeah, so I don't hold the stock and don't track it very closely, but I was very surprised with the last quarter results, which were actually very strong. So at that time, I was wondering that whether this stock should perform or people will still think that print is going out of vogue, but the stock did reasonably well. So I think there's a pickup in advertisement across the board, and it's reflective of the overall economy actually doing reasonably well now, once given the fact that inflation is under control, which most of the FMCG companies have also indicated.
Yes. In fact, Sandeep, just wanted to understand what you made of ITC and Unilever as well. I mean, ITC pretty categorically now saying that, they actually see green shoots when it comes to rural recovery.
The recovery in the consumer demand will always happen after a period of like when there's high inflation, people cut back, then inflation comes under control, and then as inflation remains under control and prices don't move up, that's when consumer demand picks up. So I think there will be a pickup in consumer demand for sure, urban as well as rural, because inflationary trends so people just look at crude oil and think that inflation goes up, and because of that, but there are various other dynamics. You look at all other metal prices x of uh, crude prices, they are down for this year or hardly up. Most, if you look at palm oil, which used to be very correlated to crude oil prices, their prices actually at 3 to 4 month lows. So I think various factors of inflation are down, and that will lead to a pickup in consumer demand. And most of these companies should do better going forward.
Of course, ITC has, delivered all guns blazing. The key positives, of course, being the fact that the cigarette volumes are much higher than what the street was penciling in at about 6%. The estimated number was anywhere between about 5 to 6%, and the revenues as well have come in higher by 10%, wherein the EBIT has jumped up about 8%. Even the FMCG business has delivered pretty well on a high base. About an 8.3% growth is what they've seen. EBIT coming in off an uptick of about nearly 37%, and the margins as well come at about 8.3%, so that's looking good. The hotels revenue as well has done well. G20, higher travel trends, all of that really contributing to the hotels business as well. There too, the EBIT has seen a jump up of 50%, no less, and the revenue has seen an uptick of about 21%. But Kunal, on the charts, can ITC push further after these numbers?
Well, it seems like, because in the last couple of days the stock was actually finding some bit of momentum from 440. The stock had come back towards 455, 460 levels, even though it slipped back again towards that 450 mark. But I think with the momentum coming back for ITC, the stock rising back above the 50-day moving average on the daily charts, I think is sort of an indication that maybe the worst could be behind to the stock price. But on the other hand, we don't at least I don't expect the stock to get into a very strong kind of a rally, in the sense like what it saw maybe one and a half odd year back, when the stock was at 200, 220 levels, and then it moved up to almost 500 mark for ITC. So I would expect a more of a gradual recovery. What the stock ideally does is, builds in a base, spends some time at the support levels, and then gradually moves up higher. So I think in that reference point, I would look at 440, 430 approximately as a fresh base for ITC, and traders can hold on to long positions or maybe create fresh longs, keeping that as a stop loss, and look out for maybe a 10% target in the next couple of months.
Right. Just pull up the 1 week charts of some of these stocks as well, because it's been an interesting move for some of these. And of course, do remember, we will be getting you that interaction with the top brass of IndusInd Bank later on down the line on the show today. Okay, the Zomato block as well in pre-market, 1.09% equity has traded in the block deal. Do remember, this is the news reports as well that were going about that SoftBank is looking to liquidate some of their stake via the block deal, where they currently hold about 2% stake in the company. So keep an eye out on that. But yeah, I was talking about some of the interesting movers, and pull up the 1 week chart of a FACT. FACT, nearly a 36% move is what you've witnessed in the week gone by. So that's been a smart mover. There's been an ITI as well that has seen a smart near 30% gain. GSFC, RCF. So a lot of these fertilizer stocks have really had a pretty strong run. Naresh, do you track anything looking good?
So in the fertilizer pack, one has to be much more careful out here, because there are no follow-up moves in the larger names. So we are not seeing a Coromandel do well, not seeing any follow-up actions. Chambal is not doing so. But yes, RCF is trying to make a breakout, but we've seen a lot of PSU names do well in the fertilizer pack, but some of them could correct also going forward. So I'd be a little careful on this sector as such. Don't have a clear view.
Full of the space, no clear view. Meantime, what's your take then, Sandeep, when it comes to the entire auto space? After having assessed the kind of auto sales numbers that have kicked in, do you think that it would merit banking on a healthy festive season and strong demand up move as well in the next coming months within the space?
Yeah, one, I think among the spaces in the market which should continue to do well, I believe auto is one where they are coming off a period of subdued growth, so volume growth is likely to pick up. The input costs are well under control, and in fact, I think only among the larger companies, only Bajaj Autos come out, and they indicated that they don't see any cost pressures per se. So a pickup in demand combined with a potential operating leverage possibility and improvement in margin should help these companies actually report earnings better than what most analysts are expecting. So I would think that auto is a good space. So among in two-wheelers, Bajaj Auto will be the preferred pick, although it's moved up. So I think we have to look at when people should buy. But M&M, Maruti, I think they are pretty well placed.
M&M, Maruti, those seem to be some of the calls coming in from Sandeep within autos. But Kunal, if you had to stack up a performer from within two-wheelers, which has already been, that's TVS Motors, or for that matter, Eicher, which has been the go-to before, of course, competition from the stable of Hero MotoCorp and Bajaj Auto came, and especially Bajaj Auto, what it's done year to date, I think almost a 30-odd% uptick, and then yesterday that big breakout. What do you do within the two-wheeler pack now?
So, I did a comparison from COVID lows because that was the first bottom which was formed for many of these two-wheeler names. And apparently, I think TVS Motors had done exceptionally well. It was the highest gainer. Bajaj Auto followed suit. Eicher Motors, Hero MotoCorp, they've been somewhere in the tune of, I think, 200 to 50% to 60% approximately from the COVID lows. But I think TVS Motors has been a standout because that stock has outperformed these stocks by a margin of, I think, 400, 500%. I'm talking of it from the COVID low specifically.
So that would be like 2020, a
2020
couple of
lows.
years.
Yeah. So that's a perfect benchmark because that was the starting point of the rally for the entire markets. Now what has happened is in the last 2 or 3 months, Bajaj Auto is picking up pace with the likes of Hero MotoCorp, Eicher Motors. These stocks have been a lot more sideways. So which means that in terms of a fresh breakout, if I have to take a trade, I would look out for Bajaj Auto from the two-wheeler pack as a more stronger candidate of a breakout. Maybe Eicher Motors could continue to remain into a range. The stock has every time shown false starts for itself, but it's not converted into major uptrend or a breakout. So which means that the stock may consolidate for some more time. I think Bajaj Auto emerges to be a leader in that category, followed by Hero MotoCorp, and then probably we can place Eicher Motors as number 3.
Okay, that's interesting data that you're tracking within the entire auto space as to who has emerged a leader from those COVID lows. I wanted to understand from you then, Sandeep, how you've read into the kind of earnings come in from the FMCG majors and, just going by that, what it would be your outlook down the line in terms of the earnings season overall? Any hits, any misses that have struck you in particular?
The FMCG company results have been in line with expectations. So I think yesterday was the big day for that ITC, HUL, and Nestle. Nestle obviously did much better in terms of profitability than the other two companies. But the outlook from here on is relatively much better off. Now the question comes about valuation. So valuations of these stocks are never cheap. So one needs to allocate to them whenever there is some sort of correction because of some reasons, etc. But overall, the picture is looking decent. Clear buys which can give a very strong return don't seem to be too visible. Britannia has corrected around 15-17% from the top. So that could be interesting. So that's something I'll watch out as the results come out.
Looking out for Britannia and awaiting those numbers. Sandeep, good to have you on the show as always. Thanks for taking the time out. So